Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a Russell 2000 chart. It's the Russell 2000 index, ticker symbol RUT, and it's a daily candle chart that goes back about a year. And as you can see, I left my lines on the chart from last week so you can see how accurate the forecast was. Now, last Friday, which was right here, we had a bullish harami, and I explained that that's a small body green candle that falls within the body of this red candle here, and lo and behold, the market went up. And this diagonal line right there is what I drew, with the end of the line being my target. And so on Tuesday, we hit that target, and not only did we hit my target right here, we filled the gap, and that's what that horizontal flat line resistance represents. That's the gap fill point. See this little gap? It's a price void on the chart. And you can see that once that gap filled, the market started turning lower. And there's the bearish engulfing pattern right here. Isn't that interesting? Well, 80% of the time after a gap fills, the market will reverse just like that. And we have a video on our webpage in the video library that explains gap trading rules for you right there. So what does that mean for next week? Well, if I zoom in just a little bit further right there, you'll see that today, right there on the 19th of June, we close with yet another bearish engulfing pattern, and the stochastics are turning lower. Down here, the CCI is turning lower. Last week I said the CCI would most likely go up. Look at that. It even followed my forecast line on the CCI. But I think next week is going to be a different story, because with these bearish engulfing patterns in place, and now the Russell 2000 closed below the 20-period moving average, I'm going to erase all of these lines, and I'm going to draw my forecast for next week, which is going to be lower, just like that. I think the Russell 2000 can go down to test this support level, so I'm going to leave that as a flatline support level, and we'll see how that works out. Now, on the Qs, ticker symbol QQQ, this more or less represents the tech sector. Once again, my target was hit precisely. I said right here, I drew this diagonal line up, and I showed you how to do that by more or less running speed lines and running your forecast lines parallel to the speed lines. And so right here, we filled the gap again on Wednesday, and then what happened? We started pulling back right at my gap fill point and right at my target. Now notice what's happening. Let me erase all these lines. So now that we hit that, I'm going to clean the chart up a bit for you. We have another resistance point up here. You see that? And I think that the Qs might go just a tad higher to test that resistance, but I think the tech sector is going to be brought down with the rest of the market to pull back to that 20-period moving average. You could see that the stochastics, while it's still going up, it's starting to hinge sideways. You see that? And the CCI has crossed with a sell signal. So that supports our idea of lower prices next week. Now, if I look at the spiders, ticker symbol SPY, this more or less represents the S&P 500. We came within $1.30 of that target price right there. Didn't quite fill the gap on the S&P, but that's pretty close to the target. And you can see that now we closed with a bearish engulfing pattern on heavier volume. So what does that volume mean? Well, when you see a bearish engulfing pattern with the price closing below that 20-period moving average, the increase in volume tells us that the sellers are getting motivated. So I'm going to erase all these lines and draw a new forecast for next week. Notice how the angle of this last down leg is more or less, it's greater than 45 degrees. It's close to a 50-degree downward angle right there. I think that this market is going to go just like that next week and test this low. We might even go so far to break down or break out below that support level and go all the way down here to test that gap fill support level. Now, it's too early to tell whether or not that will happen, but we'll have to keep an eye on the volume, because when the S&P shows a bearish engulfing pattern on high volume, if the volume continues to increase next week, that means that the sellers are becoming even more motivated. And you can see the stochastics is hinging lower. The CCI is crossing down below the zero line or the momentum line lower. And again, those oscillators are supporting my forecast that we'll see lower prices on the S&P. Now, inversely related to the S&P is what? Well, we talk about this every week. That's the volatility index. And I said most likely the volatility index would drop and move towards filling that gap. Look where the volatility index wound up today. On the low, we went a hair away from that 20-period moving average. So while we did move lower, it looks like that 20-period moving average is holding as support for the VIX. Now, if the VIX is bullish, and I think that it will go up next week, why? Because we have a bullish engulfing pattern right here. See that? I think we're going to go higher, and I think that as the VIX goes higher, that's also known as the fear index, we might see a second wave of selling come in. Remember, the bullish VIX is bearish for the market. So we have to really keep an eye on that as a leading indicator. We have resistance all the way up here at 44. Don't know if we'll hit that next week, but that would be a resistance point. And then what we'll have to do is see what's happening with these oscillators as the VIX moves higher. You can see the CCI is starting to go flat. Whether or not it turns up, I think it will, but whether or not it turns back up, we'll have to see next week. But this gap down here is still unfilled, so that is going to act as support. Remember, when you go to the video library and you look up gap trading, remember how gaps act as support and resistance, and that will most definitely help you with managing risk. Now, finally, the diamonds, if you look at the Dow Jones Industrial Average, we did move up. Didn't fill the gap. It was kind of like the S&P 500. But look at this. I'm going to erase these lines and draw new lines for you right here. This gap fill will still act as a resistance line. But again, bearish engulfing pattern on a close below that 20-period moving average. That is bearish, and we're seeing that on higher volume. So the volume is telling sellers are becoming more motivated. We have a gap that's still open down here. I think we have a shot next week of going that far down to fill that gap. So keep your stops in place. We had some followers last week that were taking the opposite position from what I forecasted. Either they got stopped out or they're making money on Friday. Again, I don't get into your accounts. I can't see the trades you're placing. But I'm telling you right now, these forecasts are very accurate. And if at the very least you use these charts as a risk management tool, then you are doing yourself a great service. You know, next week we have our open house Q&A. This is your chance to connect with me and submit your stock symbols. I'll analyze those and I'll answer your questions. Just go to the Market Guys website, scroll down, click on the Register Now button right there, and then you will be brought to the registration page where you'll save your seat. Just click on Register after you fill in your name and email address, and you'll be good to go. Now remember, when I went to the video library here, right there, click on that. When I go here, you'll see that Trading the Gap right here is a video you definitely want to watch right there. And you'll see that if you follow these market shots, it's pretty easy. All you have to do is just plug in. They're very short, just 7 minutes, 8 minutes long perhaps, and you can go through 10 of them very quickly. It's going to help you understand the language. It's going to help you with managing risk. It's going to help you identify the signals. And then you become an expert chart reader. And that's my goal, is to help you become good at reading these charts so you can forecast the markets for yourself and do the same for individual stocks. So that's it. Have a great weekend, and we will talk to you next week. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.